Trades are everywhere if you know where to look. In this video, I will show you 5 of the clearest technical strategies that can help you spot trade opportunities fast, clean, and repeatable, even if the market looks confusing. These are the same strategies I use every day to avoid noise, doubt, and take entries I trust. Strategy number 4 is a gold mine, especially when everyone else is trapped. Hello traders, welcome back to this episode. My name is Juliet. This is FinSpoke channel, where we break down trading in its simplest form, such that even a 3-year-old child will understand it and start trading. If you are coming across this channel for the first time, do well to subscribe. And if you've been following without subscribing, kindly subscribe and don't forget to leave a comment below and like this video. Let's go. Here we are in the chart. I'm going to explain these 5 strategies. Pay attention, they are almost together. Okay, now I want you to understand that if you want to make money in this industry, you must buy cheap and sell high. If you really want to make money, let me put it in a way that you understand it better. In case you don't understand how these things work. This is you in forex. This is you trying to buy a particular currency against another. That is why we have something like GBP USD. Okay. Then if it is in crypto, you want to get into the market early so that when people begin to enter into the market, you'll be able to cash out. You take profit. And this is you if you are trading stock. You also want to get in early if you want to buy. In all of these, anything in financial market, you want to buy when price is very cheap. We call it at the discount. And you want to sell. You sell high when price has risen. When price is high, you sell. That is why we call it premium. You buy low and you sell high. That is where you make profit. What we are centering on is how you can find entry, how you can spot a good place to either buy or to either sell, and you come out with something good. That's the aim of this video. I want you to watch to the end. I'm not going to make it long. By the end, I will also share with you about 4 indicators that can help you identify where to get low and where to buy high. If you are able to identify your low, even in a chubby market, or high, even in a chubby market, or even when everyone look confused, you see that you can make money all the time. This is a supply zone. Now, what makes it supply area? First, you have to see that price is trending to a particular direction, and because it's a supply area, that price is trending to the downside. You want to see this consolidation. This consolidation, price must make a kind of narrow consolidation, could be small. The initial move to break out of this zone must be strong. As you can see in this case, you see this candle push is in 3 candles that push to break out this area. So you must see something like this in order to tell you, of course, it has moved out from that zone. Then the next one is that it has to be a fresh zone. In this case, you can see that this is a fresh zone. This is where the market is currently. Is the current price. You can see the current price. You can see the movement. So I'm doing this with a live chart. No hype, just pure chart. Pay attention to the knowledge and grab it and use it to your own advantage. Now, what do we do with this supply zone? A quick appreciation. I want to say thank you to every one of you out there watching my videos, dropping a comment and liking this video, and even sharing it. Thank you very much. I know I can't reach every one of you, but if you want to reach me, click the link in the description to join my WhatsApp group, get my weekly newsletter, and download a free downloadable trading checklist. That's a free gift I have for you in this video. The link is in the description. Once this supply zone form, the price will move away from this zone, do some things, and return back to this zone. Now, what do you do? If you are finding it difficult to understand how this base is being formed, watch this video and watch it to the end. This particular video, it will help you understand the psychology behind all of this. They don't want you to know this supply and demand trick. Go and watch that video. So when price return back here, it will give you a reaction. That price reaction is not enough. So you don't need to enter this trade blindly. And that is where price action comes in first. Then the second strategy comes in, which is volume. Now, if you are also having issues understanding price action and how it works, you can also check my video on price action, best price action strategy, trading strategy. You go and check up that video. It will help you too. When price return here, this is where the main thing is. Move to the lower time frame. So you head over to 15 minutes time frame. Now, this is the 15 minutes time frame. What do you want to see at this 15 minutes time frame? We want to be sure that the move which pushed this buy that brought the market or the price to this level has ended before you can be sure that you want to enter the market. Now, how do you do this? You want to see loss in momentum. That is strategy number 2. You can apply volume. And how do you do this? You head over to your indicator section. You want to confirm. You can use your indicator section. When you go to the indicator, you click on technical, you click on profile, then you choose this last one, visible range volume profile. I am doing this with a free version. You can see it's asking me to upgrade. I tried to upgrade before this video, but network won't let me, so I don't want to waste time and pause. I can do that later. So this is the volume. This is the volume indicator. Just like this, it will appear. How do you use it? Now, when it appears here, you want to check the volume. There will be a drop. You will see a drop, a significant drop in that volume. That significant drop tells you that buyers are tired. They don't have enough strength to push higher. You can use this also if you are using basic version or free version and you are trying to make a decision here. Look at this week. That is why you need to go and watch that price action candlestick. Another of my video that can help you understand this price action is how to read candlestick. All of these, I have made videos on them. Just go play with the playlist. Pick videos that will help you, help your knowledge, give you more insight. They are all free. You look at this, price came and make high here. Then give us another high here. Come to this place and give us another high. Came here and gave us another high. And they couldn't produce that high again. Remember that the ranging started here. But when you want to talk about high, he gave us high here. He gave us high here. And he gave us a little high here. But could not produce high again. Another thing that will help you to confirm this is the candles are becoming weak. They are becoming weak and they're smaller. No much pressure. So this is what we call loss of momentum. You want to see this at the lower time frame to be sure that These people, they don't have the strength again to push higher, to push price higher before you can take this trade. You don't need to take a trade blindly. Taking a trade blindly is one of the reasons why you mark a supply zone and price will just come and flip that supply zone and move forward. So you need to get corrected here. Then the strategy number 3, that is the liquidity. Now, when price is returning to the zone, it will not return the same way it rushed to move. When price is returning back to this zone, you don't expect price to just run and come back. It's most times, in most cases, you see price coming down like this. When it came down like this, when it wants to go up or return back up, it will just be doing something like this. You definitely see that price is a trend form, but not straight going up. Price, it is correcting the inefficiencies created in this zone, but it is doing it as well as sweeping liquidity. And it is not doing this thing sideways, it is doing it to the upside. You can still find a trade if you know how to use liquidity strategy. If you know how to navigate liquidity strategy, you can find a trade before price gets to this place. But on a normal, I don't normally encourage that. Since you have discovered this zone and it is a valid zone, wait for price to return back here. The moment price return back here, you go to the lower time frame. Once you get to the lower time frame, confirm loss of momentum and be sure that price is about to move down. Then you can take your trade. Strategy number 4 is trend line. All of these things that I mentioned here, we all know it, but if you do not know how to apply them, you will keep making mistakes, and that mistakes means burning your money. We have rules, or what I may call do's and the don'ts of trend line, and when we apply them correctly, it will give us the desired result. The first one is when you want to draw your trend line, identify 3 points. Identify 3 points. Connect 3 points together. It helps to confirm the trend line. 2 is not enough. These 2, connecting 2 is not enough because you could just connect 2 random points using a diagonal trend line on your chart, and it will not give you the right information. Next is trend pullbacks. We want to connect the important points. Like this is a downtrend. We connect the point 1, we connect the point 2. We want to go short, right? When we connect point 1, point 2, point 3, we want to go short. As we extend this line, we want to take a short trade. That is what the trend line is actually showing us in a pullback. So when price pull back, touch this trend line, it shoots up again. That is the pullback. When it comes to touch the trend line, we now take a trade. That is where you see the price respecting the trend. Next, we want to observe cutting the bodies. It is okay to cut through the wick because you are treating it as a zone when you put your trend line. It is okay, you can cut across the wick. It is fine. You get it correctly because you are treating the area as a zone, not as a single leg. Okay? But it is not okay to cut across the bodies of the candles. If you cut up across the bodies of the candles, you are likely going to get a misleading information. Next is looking at the angle or watching the angle where the trend is coming from. We need to watch the angle the trend line is coming from. Now, if you look at this picture, in the uptrend, you can see that price is stiff for a short period of time. Then the second trend
shows the price is weaker and much shallower, as you can see. And from there, the third one now slopes down. The price couldn't go high again. It couldn't make another high. So the price from here to here is much shallower and it starts to push down. So we need to check the angle where the trend is coming from. Next point is takeoff and the sustainability. Looking at this picture, you can see that at the uptrend, price was close to the trend line. At some point, it kept drifting, move away from the trend and give a sustainable rise in price. Now, this thing is what we call price behavior. And you can discover that the buyers could not continue to push price high and it started drifting back close to the trend line. This is because a lot of profit has been taken. So the trend price started coming down again. And if you look at the movement from the point where profit is being taken, the price was coming down in a trend form using sideways. So what it is doing here is to clear up this trend, that this particular trend is over now. Next point is a pattern formation. So trend lines are powerful when it comes to using them to identify chart patterns or patterns formation. You can see that we have more or less, we have a support here, and it actually break the support level to come and give us this double bottom, but in a trend form. So it's powerful when we use it to identify pattern formation, or what I may call pattern foundation. And you can see the move from here. It kept moving. We have about 13 points here. We also have that of break and retest. I've mentioned about 6 or 7 points on this that can actually help you get a good trade. If you want to know more about the remaining points, type "I'm interested" in the comment section and I will send it to you in a PDF format. It's time for the indicators. So you head over to your indicator section and go to the search bar. The first one I want to show you is the daily high and low. Once you type the daily high and low, it will come out and you apply it. What this indicator does is to help you identify the highs and the lows each day. So this one helps you to identify the highs, and this one helps you to identify the lows. Even in a ranging market, it will help you to identify your lows and your highs. And you understand that if you buy at the low, then you sell at high. With this, you can identify the highs and the lows of the previous day. Next is divergence. As a price action trader, you should be conversant with convergence and divergence. But this time around, we want to talk about the divergence. What this divergence indicator does for you is to show you a disagreement between the chart and the indicator. A kind of disagreement between the price action, that's the chart, and this indicator. And what this signifies is weakness in the trend. The trend is getting weaker. That's what it means. So the moment you see it, you know that the trend is getting weaker. Next is Fibonacci retracement. You apply it from the swing low to the swing high in case of the uptrend. You want to know where the pullback is likely going to end. So when you get a pullback, you can see this pullback. around 0.5. I have, if you don't understand how this works, you can check out my videos, how to use Fibonacci retracement. It will help you get a clearer insight and understanding on this. And for the fourth indicator, type indicator in the comment section. I will drop it there.
If you have gained value in this video, please don't leave without subscribing, leaving a comment below, and liking this video. Share it to every trader out there. Till I come your way next time.